Hello and welcome. You're watching Money 9. I'm Sakshi Batra, and on this show, we are going to be discussing all about the yellow metal, the glittering gold, or is it? Is the big question right now that we are going to be asking. Joining in is going to be a very special guest who's going to help us all understand everything about this glittery gold as to what should be your investment strategy in this precious metal going forward from here. Joining in is Tapan Patel, Senior Research Analyst of Commodities at HDFC Securities on this edition of Game of Gold. Tapan, thank you so much for taking our time for us. Well, the gold prices have actually been slipping, and today we've also seen a price below 46,000 rupee per 10 grams. So, what are you looking at in the current scenario? Are we going to see further dips into the gold prices? And especially so far in the last few weeks that we've been seeing a sideways move or a subdued momentum, what is really causing the pressure on these gold prices?
Good afternoon, Sakshi. Thank you for having me on the show. So, gold price so far till year has given negative returns, and it has quite disappointed the retail investors and long-term investors because just like 2020 and 2019, price have not done so good so far. In both the last previous year, prices have given more than 20% of returns. So this year, what is happening? Let's discuss that. So first of all, since January, global markets were talking about large-scale vaccination and reopening of global economies. So these both have caused tremendous pressure on gold prices by as the investment sentiment has been improved and global funds and all investors have shifted to riskier assets rather than safe assets like gold and silver. So this was the main trigger for selling in gold and silver prices both. And gold price have witnessed selling from 2075 levels till below 1700 levels in March and April. Right.
Yeah.
So these are the main factors. Another factor causing the pressure was the rally in US bond yields. So in March, April, we have seen first leg of rally in US bond yields with when US FOMC signaled that they may taper the bond buying and they may raise interest rates in 2023. So
Hmm.
this was the causing factor of the selling in gold prices. Now recently, again, the US Fed has reiterated that they may end pandemic-related stimulus by mid 2022, and they
Hmm.
also signal that they may raise interest rate by end of 2022. So this
Yeah.
hawkish stance has again created pressure on gold prices with rally in dollar index and also in US bond yields. So if we see 10-year US bond yields have rallied to 1.53%, which is the highest since last June 2020. Uh, the rates have rallied from 1.17%. So there is a
Hmm.
tremendous spike in the rates, which has caused the selling in gold prices. So these are the factors that can affected the gold prices and discounted the prices in the current year. If we see the
Okay.
investment perspective, then gold ETF holdings have also declined.
Yeah,
If we see
I,
just
I, I, yeah, I actually will ask you about the investment part. I wanted to actually first focus on the current levels. Now we are seeing these below 46,000 rupee kind of levels per 10 gram. Usually, what we have seen is that, investors flock to the jewelry shops every time there is a dip in gold prices. But so far, we have been seeing a decline since you said that, gold prices so far in 2021, they've given a negative return of about 8%. So the prices are still lower, about 10,000 rupees off the record high levels that we had seen in August of 2020. We are 1 year ahead and we are 10,000 rupees off those record high levels. At this point in time, what is the sense that you're getting? Are people really going ahead and buying gold at this level?
Yes, the footfalls has been increased in retail jewelry shops because the wedding
Hmm.
season and festival season is ahead, and India is leading in a global vaccination race, and so which we can see tremendous response from retail investors, especially from jewelry segment, which can affect gold prices to trade higher. Another investment perspective is that the global travel was banned and the flights were not operating, so the international demand was also limited. So now global travel is also resuming, then we can expect the international demand also from a jewelry segment on in Indian market. These factors can also support gold prices to trade higher in short term to medium term. Another factor we can expect some support for gold prices is that the rising energy costs. So if you see recently, natural gas and coal prices are soaring, which is also affecting the global crude oil prices. So again, inflation risks is also there, And
Mm.
as global economies are recovering, these inflation pressures may also hurdle the economic growth, and which can alternatively will support gold prices to trade higher. So I think
Okay.
downside will be limited for short to medium term in gold prices, but we can expect definitely some pullback in gold prices from current levels.
Yes, I was actually coming to that only because you did point out in your initial comments that, going forward, we are heading towards the festive season. We are going to be seeing wedding season also approaching quite fast. And you're saying that, because of the, attractive prices of gold, people are going ahead and buying. But do you believe that because of these two major factors, usually we always see there is a high demand around Dhanteras, Diwali for gold, and during wedding season as well? So going forward, what is your outlook on the demand for gold, especially physical gold, and what are the kind of levels that you're looking at for the near term for gold going forward from here?
Right. So if we see Indian consumption, then let's start from the retail jewelers who are importing gold from outside market. So imports have rallied, risen in first 8 months of this year, and we can expect that these will definitely will reflect in a jewelry segment also.
Hmm.
So jewelers are expecting huge demand, and footfalls there is already coming in. So
Yeah.
jewelry demand will be higher in coming festival season. And since last 1.5 years, almost weddings have been stopped. So those who want to have some grand wedding, we will definitely see the jewelry demand coming up in this wedding season also in next 6 months. So till Diwali, I think 47,500 rupees per 10 gram will be upside for gold. I'm not expecting much higher levels because global
Hmm.
cues are quite weak. As I said, US Fed is the main factor. The policy change from US Fed may affect the gold prices in
Hmm.
overall global market, and due to that, bond market will also affect gold prices. But also, I expect that higher inflation concerns also will support gold prices in
Okay.
coming months. So 47,500 is the limit for Diwali, and for year end, I think 48,500 for 10 gram will be the limit.
Hmm.
If we see the next FOMC meeting falls on November first week, which is 4th and 5th of November, and that is the main Diwali and New Year days of the November. So
Correct.
we can expect huge volatility on those auspicious days.
Okay, understand. So apart from those auspicious days where there could be high volatility in the prices, the range-bound momentum may continue, although there are some factors that may pull back gold prices from the current low levels. However, not too much. We are still likely to see a year-end of below 50,000 rupees for gold prices from here on. But definitely, the festive season and the wedding season is going to aid the domestic demand for gold. But now I'm going to ask you about investment options. Say, for example, for all those investors not looking at really buying gold for their own consumption or for jewelry purposes, for wedding purposes, but they want to invest in gold as an investment option as well. Would you really advise at these levels that investors should go for buying physical gold? And if not, what are the other options that actually they can explore?
Yes, I think if we see Indian gold prices in a history, I think last if we take 100 years of data, then I don't
Hmm.
think that gold prices are repeating themselves of the last 5 to 3 years price, right? So if we take
Yeah.
example of 2008 levels, then price made 25,000, 34,000 highs. Now we have not seen those level after 2008, right? So
Hmm.
again, this will happen in the current scenario also. No doubt, small correction may come, but I think 44,000 to 42,000 is the great level to again enter for long-term investments. Even at current price, those investors who want to have gold in long-term invest as a long-term investment, they can enter at current levels also. So I think
Hmm.
Delhi and dollar index will definitely help Indian gold prices because rupee will ultimately depreciate with dollar. This will help Indian gold prices to appreciate further.
Okay. Also, one comment on silver, since we always talk about silver when we are talking about gold as well. Most of the experts have been of the view that, over the past historic returns, we've always seen that silver has actually outperformed in the recent past. What is your thought here? In case anybody wants to invest in either gold or silver, which is the better investment bet?
Yes, I think silver is a more preferable investment even you for Indian players who want to invest rather than consume gold, right?
Correct.
So silver has dual advantage. It is come as precious metal also and also used as industrial metal. right?
Right.
So that's why the silver's value is much higher than gold, and that's why silver generally outperforms gold in the longer term. But I think for investment purposes, I think balance investment I will prefer. So 70 to 30% ratio should be there to invest in gold and silver both, right?
Mm.
For short term, you can have the price spikes due to uncertain events like pandemic, war, and everything. So it will give advantage you for to invest in gold. But for long term, as a demand perspective, silver will give more returns compared to gold.
So just a clarity, 70% of your investment in commodity should go into gold and 30% in silver. That's what you're
Yeah,
telling.
out of 100, if you want to invest in gold or silver both, out of 100, 70% should be in silver, 30% should be in gold.
Okay, understood that. Well, on that note, thank you so much, Mr. Patel, for joining us and sharing your view on the commodity space, especially gold and silver, and how the prices are going to move ahead from here. Of course, the wedding season and the festive season might bring up some joy for gold prices, but for all the investors and consumers of gold, this may be the right time. If it is fallen below 46,000, it is still an attractive time. He does believe that 42,000 to 44,000 could be a range that one can actually look at, which will be the most appropriate time when you can actually time your investments into gold. And that is something that you should definitely keep in mind whenever you're investing in gold for jewelry purposes or for investment as well. And with that, we wrap up this edition of Game of Gold, but we'll keep getting you such interesting conversations so that you can get to know whether it is the right time for you to add some gold to your portfolio.